Hi, this is Sheldon here from the Currency Advisory Desk with today's report. Well, we have the all-important RBI policy meet which is scheduled for tomorrow, and we believe that RBI may not touch interest rates this time also, but however will reduce the cash reserve ratio by another 25 basis points. Now, if RBI however does decide to lower rates, then we will see immediate strengthening of the Indian rupee against the US dollar. Hence, we recommend our traders to hedge their overnight positions appropriately. Now, the US dollar index is trading at around 80, and it's 80.19 to be precise, which is up by 0.10%. Now, the 80 level is a very crucial level for the US dollar index, and since it's trading above it, it shows that there's a lot of strength in the US currency. Now, for the dollar rupee pair, the short-term movement will depend majorly on what the RBI does or does not do tomorrow. Now, there has been a cabinet shuffle at the center. However, there won't be much bearing of this on the markets. Also today, we have the October series expiry. Hence, we advise our traders to take minimal positions in this pair for the next 2 days, that is today and tomorrow at least, because there will be a lot of volatility considering all these factors that are present in the market. Now, last week we had the US GDP data which came in at 2% for the quarter and was higher than expectations. Also, Spanish unemployment rate rose to an all-time high of 25%. Now, the euro moved lower to around 1.2916 levels as soon as this data was flashed, and we expect it to weaken further to around 1.2850 levels or so. The euro can be sold at around 69.50 levels against the Indian rupee, and we expect it to trade at around 69.15 to 69.20 levels against the rupee. Now, the pound was trading relatively stronger against the US dollar as compared to the euro, and it's trading presently at around 1.6087, which is still holding on to its important support level of 1.6000. Now, the major reason for this is UK's preliminary GDP data, which came in stronger at 1% versus an expectation of around 0.6% last week. However, as we all know, this is only a preliminary figure, and the actual data will be confirmed after review on 26th of November. So we do not read much into this figure and advise our traders to take this data with a pinch of salt. Now, we expect the pound to break 1.60 level and trade lower at around 1.5960 to 1.5970 levels. Now, there is no major data from Europe this week, and the European currencies will probably look at US non-farm payroll data and unemployment data, which will be scheduled later this weekend. Now, along with RBI, we have the Bank of Japan, which will also release its monetary statement tomorrow. We expect that they will increase their asset purchase program and expect the yen will weaken further against the dollar. It's presently trading at around 79.72 levels. In rupee terms, we expect the yen to appreciate intraday against the Indian rupee, and traders can hence enter long positions at around 67.50 for a move towards 67.85 to 68 levels. The US markets are closed today, and this closure may continue tomorrow also. This is due to the effects of Hurricane Sandy that is there present. Looking at the technical levels for today, the dollar in the spot market has a very strong support at 53.47 on the downside and a resistance at around 54.17 on the upside. For the euro, there is a strong support at around 69.37 on the downside and a resistance at around 70.1 level on the upside. For the pound, we see that there is a support at around 85.50 on the downside, and the spot has a resistance at around 86.71 on the upside. And lastly, for the yen, well, there is a support at around 66.55 on the downside and a very strong resistance at around 67.75 on the upside. Well, that's it for today. Thank you.